day everyone, welcome to Accounting Expo. Today we are going to look at this question. The question goes forth. You are given the following record from the book of Ade to prepare the appropriate subsidiary books of accounts. Now it is worthy of note that whenever you are given a question, you read through the question and have an understanding of what is expected of you. So let's look at the question. January 1, 21, January 20, sold goods for cash at 400 naira. We all know that cash accounts, cash book is a subsidiary book of accounts. But presently, we are not expected to prepare cash book. So sold goods for cash is not the appropriate book of accounts we are preparing at the moment. 21. The question goes forth. Bought 4 shirts at 150 naira on credit, which were returned to us by Tolu. Whenever we hear that word to us in an examination condition, we are representing that person whose account we are preparing. So meaning the 4 shirts that were bought and returned to us were bought from Ade, whose books we are preparing. So in essence, today we shall be preparing return inwards. That's the appropriate book of accounts, subsidiary book of accounts we are to prepare. So our lesson title is Return Inwards. And whenever you are given a question, it's worthy of note that you write the name of the organization whose account we are preparing, followed by the requirement. So the requirement is return inwards the book. So back to the solution. Bought 4 shirts at 150 on credit were returned to us by Tolu. So in that essence, the date will be January 21. Tolu will be the first thing we are writing in particular column. Then what Tolu returned? 4 shirts at 150. So 4 shirts at 150, meaning the 4 shirts summed up to 150. So we are writing 150 in the amount column as well as the total column. Then we close the transaction up. It's worthy of note that I wrote 150 naira under the amount column as well as the total column, because the question says 4 shirts at 150. It doesn't have each included in the question, and that's why the amount remains 150 and the total the same 150 naira. So on the 23rd of January, bought motor van for cash at 1,000 naira. Now that's a cash transaction, and the appropriate book of original entry we are looking at is the return inwards day book. So that transaction will not go to the return inwards day book, rather it will go to the cash book. Now the next one, January 24, 5 rulers at 100 naira each were returned by Dapo to us. Now that Dapo is returning it to us, and that's the reason why the transaction we go to return invoice day book. So January 24, the person that returned it was Dapo, and he returned 5 rulers at 100 naira each. 5 times 100 gives us 500 naira. So 500 naira. So we separate Dapo's transaction from Tolu's transaction by drawing a line under the. Now on the 25th of January, bought recycle bin at 5,000 naira for office, 5,000 naira cash from office. That's equally a cash transaction, and it will not be recorded in the return invoice day book. January 25, return cash of 400 naira to Dele. Although it was cash that were returned to Dele, but it wasn't good. It wasn't goods, and as a result of that, that's a cash transaction, so it will not be recorded in the return invoice day book. 25, returned cash of 400 naira to Dele. Ade return cash of 400 naira to Dele. That's a cash transaction, because it was cash that were returned to Dele and not goods. So it will be recorded, such transactions are recorded in the cash book. The appropriate subsidiary book of account for such transaction is the cash book. Now January 26, return goods to us by Yemi at 5,000 naira. That is goods worth 5,000 naira. Whose books of our subsidiary book of account we are preparing by Yemi. So we write January 26. The name of the person that returned the goods was Yemi. So the column for amount, we write 5,000 naira, and as well write 5,000 naira here. We must always maintain a proper place value. At the end of the month, okay, so this is 0, 5, please, we must always maintain a proper place value. Five, 6, and 5. So at the end of the month, the total amount will be transferred to return inward accounts. So the next thing is to prepare the ledger entry ledger entries of the transaction. Now always write your debit on the left hand side and your credit on the right hand side. Now, in line with the tricks of debiting and crediting, which revolve round dealer. The last time we talked about the trick of debiting and crediting, we said whenever asset is increasing, we debit. Now, when goods are returned to us, our stock of goods are increasing. So, and as a result of that, the return inwards account will be debited because it led to an increase in the asset as per the total quantity of goods, the value of goods we have. So here we write 31,100. And what led to the increase? The debtors that returned the goods to us. The three debtors, and the total worth of goods returned to us summed up to 5,650 naira. Now, in the case of each debtor, when they return goods to us, our collectible debts from them reduced. That's assets. Our asset, our property, our money with them reduced at the rate based on the value of goods they return to us. And whenever there is reduction in any assets, we are to credit such assets. But the set of assets that is reducing is our collectible debts, collectible money from them. So our collectible money from Tolu reduced by 150. So it will be, such transaction will be credited. So the date 21st of January, and what led to the reduction, that's return inwards of how much? 150 naira. The same thing goes for Dapo. 24/1 return inward. How much? 500 naira. The same thing goes for Yemi. 26th of January, 26/1 return inward. How much? 5,000 naira. Now, having gotten to this stage, I want to thank you for viewing up to this stage. Thank you and God bless you. Have a great day.